Hey traders, welcome back to this week's weekly Forex forecast. Last week was a bit of a crazy week with the VIX. We saw the VIX exploding. This brought risk off into Forex markets, but it does look like the VIX is settling down and most likely we'll see a little bit of risk on coming into the back end of the month. We do have FOMC, not this coming week, but the week after. So the US dollar pairs are unlikely to do too much next week. They'll probably chop around and range, but they're unlikely to find any significant direction ahead of FOMC in a couple of weeks' time. So I do think, we could start to see volatility and risk off picking back up in quite a significant way in November and after the FOMC event. Again, not next week, but the week after. So with that in mind, I do think there are better pairs to be trading next week other than the US dollar pairs, and we'll look at that in today's video in the portfolio selection. If we just zoom into euro dollar, you can see the bigger range here. It's between this high, which we've attempted to break, and now we've attempted to break that and failed. There's a good chance we're coming back down to the range low. So if I just zoom in here though, in euro dollar, what I would like to see next week is I would like to see euro dollar pushing up, breaching the upper bound and trading into the sell zone. So my directional bias, with this would be on balance to the downside. I mean, both the euro and the dollar are starting to, perform against other currencies. So it's not surprising that this is ranging. When you have two kind of stronger currencies, they go sideways. You have two kind of weaker currencies, they go sideways. And if you have a strong and a weak currency, it goes up. You have a weak and a strong currency, goes down. So we're seeing, both the euro and the dollar kind of strong, especially relative to other currencies. So with that and FOMC in 2 weeks time, I do think we're probably just going to chop around. So if we trade above the 1.1754, this is the high right here. I'm going to be looking for a failed breakout because my bias overall would be back down to the range low, and we should hold this bigger range, before FOMC over the next week or two. So if we can push into this high next week, this is just as we were talking about last week. This is going to be a great place to start to look for a failed breakout. And when you get that liquidation, so you get buyers coming in, then they pull their positions, and that liquidation is where we can get paid. And usually, I'm looking for a 1 or 2 day return on any kind of trade in that area. We don't normally come back, past halfway once we trade into the sell zone, or if we trade into the buy zone, we don't really tend to come back, to the halfway point of the range. So these are the exact setups that we look at in real time with GMT members each day when they materialize. But this is the setup I'm going to be looking at next week in euro dollar. So I do think there are better opportunities next week other than the dollar pairs, and we're going to be looking at those pairs in today's video. Okay, so moving on to the portfolio selection, and the number one long theme once again this week is the Swiss franc. So I'm going to be looking for long opportunities in the Swiss franc pairs in the direction of the Swiss franc. So buying Swiss franc, selling any of the other currencies against it. But primarily, I would like to be short the yen this week. I would like to be short the Aussie and also the New Zealand. You can again look at the CAD. We are seeing crude oil weakening. Crude oil is still a short or do nothing. So that's likely to weigh on the Canadian dollar, but out of those, I still prefer, as it currently stands, the yen as a short, the Aussie as short, and New Zealand as short. Now, just bear in mind, if you do start to see the VIX accelerating next week and you start to see, volatility exploding, you may just want to double check any of the yen short opportunities because the yen tends to rise during that kind of heightened volatility. But because we've had the spike and we kind of saw it, get crushed towards the end of last week, there's a very good chance, I think, that, volatility stays in check until after FOMC now. So that's why I'm happy to go back in and look at yen shorts. But if you start to see the VIX exploding, just, put the yen shorts, to the side, or at least be careful if you're getting involved with them. But assuming that isn't going to happen, and that's kind of my base case, Japanese yen shorts, Aussie shorts, and New Zealand shorts versus the Swiss franc primarily, then versus the euro, and then you can kind of look at the pound or the dollar. So, to the short side, the CAD or the New Zealand, and to the long side, the pound and the dollar. We're going to go with the pound this week. So the pairs that I like the best going into next week in terms of portfolio selection and bias are franc yen to the upside, Aussie franc to the downside, New Zealand franc to the downside. We're also going to be looking at in today's video, and at the top of my watch list, Euro yen to the upside, Euro Aussie to the upside, Euro New Zealand to the upside. And we're also going to look at pound yen to the upside, pound Aussie to the upside, and pound New Zealand to the upside. Okay, so kicking off the watch list as we always do with crude oil. Now, crude oil is still short or do nothing. And you can see over here, I kind of highlighted in previous videos, this looked like a one wave. You know, we kind of had the breakdown. Then we got the right shoulder and we started to sell off. So this was a nice pullback and a correction. And now we're kind of lacking a little bit of momentum. So what I would like to see really is one of two things. I would like to see a pullback. If I'm looking to be short something, I pretty much always want to see it pull back first. It can be a shallow pullback or it can be a deep pullback, and I'll explain how you can tell the difference. Now, usually you can't tell the difference in advance, but as it's happening, you know, reactively, you can start to see whether you're going to get a shallow pullback or a deep pullback. So what I'd like to see is I'd like to see this trading back above the moving average, just as it does over here. Because once you start to trade above the moving average, it means you're correcting. You know, if you're moving down below the moving average, you're kind of trending. But once you start to crisscross it, it means you are, you know, ranging, consolidating, etc. So I'd like to see it pull back, trade above and start to trade above the moving average. And then what you'll be looking for then is for this to just continue to hold, kind of continues to hold, continues to hold. If it continues to hold, and you trade, it holds all the way into the upper bound at the 60.93. This is where you've got your deeper pullback because you failed. You know, you started to correct, but you've corrected all the way back into the sell zone. So I can only be a seller of this market next week. I cannot buy this market. So I want to see one of two things. I want to see it pull back, trade into the sell zone, and the prior high is all the way up here. Now the issue, the slight issue is this is above the halfway point. If you're pushing into, you know, the sell zone, you kind of want to see a key area of resistance if you're looking for a short, you know, somewhere in the first half of the range, you know, down here, essentially. Because once you breach this, you know, you're quite deep. I mean, if it does come all the way back here, fantastic. You know, this would be a great place to look for a failed breakout. But because it's quite deep, you may find that you start to get a kind of head and shoulders, or you start to lack momentum here. It kind of forms its own resistance and then it fails. So you might not get the pullback all the way up to here. So if we trade into the sell zone above the 60.93 next week, I will be looking for a potential sell the rip opportunity. Again, looking for a 1 or 2 days return to the downside. Now, if you get a shallow pullback, what that will look like is you break, you start to pull back, but instead of pushing into the weekly upper bound and turning overbought, that's where you start to see it re-break. And again, by the time that happens, you can usually draw your counter trend line on like this. You get the re-break, the moving average tends to follow it, and then you start to pull back and you're trading into the profit target then to the downside at the 50.34. So if you trade into the sell zone, you know, you're probably at best going to come back halfway. But if you don't trade into the sell zone, then you've got a very good shot at achieving the profit target to the downside, in this case, the 50.34. So that's what I'm going to be looking at in crude oil next week, and that's exactly what I'm going to be looking at in terms of setups in all of the assets in today's video. Okay, so moving on to the Forex market, starting with the Swiss Franc pairs. Now, the Swiss Franc pairs are obviously my favorite setups going into next week, with the Swiss Franc being the #1 long theme quantitatively. What I would like to see in Franc Yen is we're starting the week above the moving average. So ideally, and remember, you're not going to get a setup in every market. We're wargaming many markets, multiple markets, and then we're looking for where the setups do appear, you know, throughout the week. But you're not going to be trading every market every week. So I'd like to see Franc Yen start to break back down below the moving average, making its way down towards the lower bound. If we pull all the way back and breach the 187.86, this is the prior high, which would turn into a stair step. So stair step is where you break through, then you retest. You break through, you retest. So this is the area, and as we trade into this, you know, you will see sellers will be stepping in and they'll be trying to break through here. And this is where you want to look for sellers to get trapped, pull their positions, and that's where you're going to get a nice liquidation in the direction of the overall trend. The second thing to look for is a fast market. So we start to get that pullback, but instead of a deep pullback where we turn oversold during the week, you know, in a market we're looking to buy, we start to re-break back above the moving average. And that, again, you'd be able to put your kind of counter trend line on like this. The moving average follows it, pulls back, and then you start to trade into profit taking target to the upside, the weekly upper bound is the 191.78. So again, if you're long intra-week and you trade into the sell zone, yes, you may only be a buyer, but if you've already bought it, then you can sell what you've bought, right? So you're booking profits in the sell zone, because once you turn overbought during the week, your odds of continuing are diminished. So it's a good place to start to book profits above the 191.78 next week. Next is Aussie Franc. Now you can see we're actually in a big kind of consolidation. We're starting to break back down to the prior low after this momentum sell-off. So if we just zoom in here on the 4 hours, you can see this is really a market I'm looking to be short or do nothing. We had quite a lot of volatility last week with this sell-off. So I would not be surprised to see this snapping back. Look for this to trade back above the moving average next week. That's where you get your kind of correction. And then as we start to push back, I'd be looking for a trade above the 0.52142. This is where we enter the sell zone. So we turn overbought during the week. And we have a really nice high right here, which I'll be primarily looking at. So I'll be looking for a failed breakout. I'll be looking for buyers to attempt to drive through this high in the sell zone. And as they struggle and they start to fail and you start to get your double tops, your head and shoulder patterns, they pull their positions. That liquidation to the downside is what I'll be looking at next week. If you get a fast market, so you make your way, you break above it and you start to make your way towards the level, but then you re-break down. The moving average follows it. And again, that would give you, you'd have some kind of counter trend line move there. That's your opportunity to look for a short, that kind of bear flag setup into the buy zone below the 0.5081. But I would aim for, if you're looking for a kind of profit target next week, it would be the prior low. So that prior low right in the buy zone, as soon as we hit that, you may find we start to struggle below there. So great profit taking opportunity in Aussie Franc next week. And the final franc pair is New Zealand franc. Now, New Zealand franc is trending to the downside, making its way down after this breakout. Again, notice how we trade above the moving average. We're chopping around it, and then we start to break and trend. So I'd be looking for a pullback above the moving average, and I'll be looking for a pullback into the sell zone, which is above the 0.45997. And this is a really nice high right here. So this is where I'll be looking for a pullback and an attempt to break through this high, this key area of resistance. And that's where I'll be looking for a failure back in line with the overall channel and the trend to the downside for a 1 or 2 day liquidation. If you start to break up above and you get that kind of counter trend move, and then you get the counter trend break. So it'll break below the moving average, but also again, you'll be able to, put a counter trend line on like this. Moving average follows it. That's where you get your bear flag set up into the profit taking target next week at 0.44831. Okay, so moving on to the euro pairs, starting with euro yen. Now, euro yen is already, by the looks of it, coming back to potentially close this gap down here from that Japanese election news. And we're already below the moving average as well. So you can see we've already started to form the counter trend line move here. So what I'll be looking for is I'll be looking for a continuation for this to keep coming down, close the gap, fill the gap in the from the Japanese elections, and trade into the buy zone. Once we trade into the buy zone next week, if we can trade into the buy zone and this counter trend move can hold, then I will be looking for a gap close. And this is where I would start to look for sellers to exit their positions, because don't forget, these sellers, they're going to be shorting and their profit target is going to be this gap close. So if you're short, put yourself in the position of somebody who's short, and who knows, they might get caught offside, right? People who are short over here for the gap close, maybe this breaks out. That's the second thing we'll look at. But let's say we do get the pullback all the way down to here, which is what we're looking for. You should anticipate these sellers booking their profits. And that is likely going to see, a snapback and a liquidation to the upside. If we fail, and this is where sellers who are looking for this gap close kind of counter trend, to be honest with you, are taking a risk, because we may just start to come down next week and then get the breakout, right? We may see the market coming down, attempting to close the gap and just getting a re-break of this counter trend move. Moving average follows it. That's where you get your bull flag set up into the prior high and in the buy zone next week, and into the sell zone, which is the profit taking zone above the 177.39. But if you are long, I would personally be targeting the prior high for any profit taking opportunity next week in euro yen. Next is EurAusd. Now, EurAusd was a buy opportunity last week, and we actually came right down into the buy zone and we tagged it and we had this rip higher. So the buying opportunity was from the lower bound last week. I'm pretty sure this was in last week's weekly Forex Forecast video. But what you can see here is we closed the week here, and last week we closed the week here. So almost in the exact same place, which means these levels are pretty much in the same place they were last week. So you can see we gapped down, we sold off, and this was kind of in the overnight session. But if you were trading the overnight session, you could see this dip down, tagged the weekly lower bound, and ripped higher. That was the opportunity last week. That was the liquidation we were talking about last week. So ideally, because we're back in the same, pretty much exactly the same setup, I am simply just looking for the same thing. So we're starting to, by the looks of it, break down below the moving average already. So I'm going to look for this start to break down. And as it breaks down, you're going to get pullbacks, and you're going to start to be able to draw your counter trend line on somewhere down here. And as that happens, you're looking for that counter trend line to hold this all the way down to the prior low. And I would essentially just simply be looking for the same opportunity. At this low, I'd be looking for sellers to get trapped once again, and I'd be looking for that 1 or 2 day liquidation back inside the range. No more. Very occasionally you go from one weekly lower bound to the other. I think actually we saw this last week. EurAud hit the lower bound, and I think it hit the upper bound as well. Very rare for that to happen. It means there's real volatility, which, of course, we're seeing after that China tariff news. So that's what I'll be looking at once again this week for a trade back in pretty much the same area we were looking at for last week. But if you get a fast markets, you start to trade below, and instead of pulling all the way back, that's where you can look for the breakout. The moving average follows it, and by that point, you'll probably have a counter trend line on, pulls back, and then we trade into, in this case, I'd be looking for the prior high. Whenever you get a prior high sitting just inside, the sell zone, and you're kind of looking to be long, that's just a great place to just book your profits. And, that's where you get the risk of a double top, because it books profits and it starts to pull back. So that's what I'll be looking at in EurAusd next week. I can either buy it or do nothing. Selling this market is not an option for me next week. Next is Euro New Zealand. I can either be a buyer or do nothing. What I'd like to see, once again, we're sitting at the moving average. So I'd like to see this breaking down below. Regardless of what happens, I'd like to see this starting to correct like this. Okay, I'd like to see this starting to correct. Once we start to correct, because, if you're jumping up here, you may get a short-term buying opportunity, but the bigger moves, the stronger moves will come after a correction. So if this starts to counter trend and this holds all the way down, you can begin to look for kind of buy the dip opportunity. There's a really nice low here, and there's one actually just below it. So at the 2.00639, this is where I'd be looking for a bounce. I'd be looking for sellers to get trapped in the buy zone, and I'd be looking for that 1 or 2 day reversal. If we get a fast markets, we break down below it, and we're kind of trending down, but then we get the re-break. And notice here it kind of breaks, pulls back, but here it breaks, and then we get this kind of bull flag. Notice how we get momentum up, momentum down, and it's just chopping. But then we get momentum up, correction, okay? And then we start to move up. So that would be your bull flag opportunity. Moving average will follow price up, and then you could look for that pullback into, in this case, past the prior high and onto the 2.05536, which is the profit taking zone next week in Euro New Zealand to the upside. Okay, wrapping up the Forex universe with the pound pairs before we move on to gold and silver. Starting with pound yen. Now I've got 2 lines on here. One is the gap close for the deeper pullback. So, we're trading below the moving average. We're kind of popping above it, and, it kind of chops around, but we're not really trading above it. May test the counter trend channel again, and then pull back into the buy zone. So we've got this gap close down here. Just as I was talking about before, we should anticipate if this gap closes, and we're looking for long opportunities in line with the overall trend, we should anticipate shorts targeting this gap close. So put yourself in the shoes of the seller. You hit this gap close. What do? You buy back. What you've sold, you book your profits, and new buyers step in as well. And this way you get that bounce. So this is where I'd be looking for a bounce to the upside for a 1 or 2 day liquidation next week in pound yen. If we get a fast market, so sellers, maybe they get trapped here, and sellers, they're moving their stop losses down like this. We bounce off of here. And then what happens is we get a break up. Stop losses get taken out, and you get a strong rally. Price pulls back. The moving average follows it. And then you get your bull flag set up. Again, I would target the prior high. Even though it's above, the start of the sell zone. These are just zones. So it's, once you enter this zone, you begin to look to see where you can, book your profits. Maybe there's a nice high over here to book profits on. Maybe there is no high over here, and so you look for the first double top in there to book profits, etc. But that is what I would target next week, the prior high in pound yen. I can only be a buyer next week of pound yen or do nothing. But just bear in mind, if volatility starts to go through the roof, you may see pound yen selling off. So you might just want to be careful and just at least double check, you know, volatility has slowed down again. But again, I don't anticipate the VIX doing that. I think we're pretty much in the clear until after FOMC and into November in terms of volatility. Next is pound Aussie. I can only be a buyer. I cannot be a seller of this market next week. So because we're above the moving average, I'd like to see it breaking down below it, right? Maybe it consolidates and then it starts to break lower. Once we get that correction, once we get that pullback, going to be looking for a trade down to the 2.04583, which is this low in the buy zone. And this is where I'll begin to look for sellers to pull their positions and get trapped. That is the opportunity I'll be looking for. In fact, we saw a very similar thing. Gap down. I think it hit this lower bound. Pretty sure it hit the lower bound because a bunch of them did in the Aussie pairs. And then we got the rally, and we actually had the rally all the way up last week in pound Aussie as well. So this kind of pullback into the lower bound is exactly what I'm going to be looking for. Market turned oversold last week, and then it rallied. So I'll be looking for that in pound Aussie. Once we start to trade back, you know, if we start to correct and consolidate, especially as we had this big sell-off, you know, I wouldn't be surprised to see it move sideways and then sell off again. Because this momentum precedes price. So, you know, I wouldn't short it, but I wouldn't be surprised if we started to come down. That's where you start to draw your counter trend line on. And if you get a fast market and it breaks and the moving average follows it, that's where you get your bull flag set up. And I would personally target this high here. It's just in front of the sell zone, and the next high is all the way up here by the second upper bound. So unless you've got a major catalyst, you don't tend to take these levels out. So in all probability, you know, you get a bull flag set up next week. This would be the high that I would target in pound Aussie to the upside next week. And last but not least, we have pound New Zealand. Now, in terms of horizontal support or resistance, we don't really have anything until this low here, which is quite near the second lower bound. So what we do have, you know, that's not really that viable. But what we do have is we have a ascending support level. So this would also set up, it's a setup which is called a third touch of the trend line, where you get a pullback, and very often you get a third touch of a trend line. 1, 2, 3, that is where you can get big explosive moves. So very simply put, I'd like to see this correcting back below the moving average, and this is where you can start to draw on your counter trend line. Now, when you've got a channel like this, the counter trend lines are very easy. They just kind of get drawn across like this into the channel. So you're looking for the breakout, you know, either the dip, so it comes back down, it trades below. I would still like to see it turn over sold during the week below the 2.3214. And at the same time, you know, it will probably, if it does pull back to it, it'll probably start to look like it's attempting to break through, right? And then it kind of reclaims it, and you get that rally to the upside. So that's what I'll be looking for, a potential buy the dip opportunity from below the 2.3214 and the third touch of this trend line. If we start to pull back and we fail to get there, you know, and we get a fast market, so this kind of breakout just comes sooner, then of course that's where you get your bull flag set up, moving average follows it. And the profit taking target in pound New Zealand next week is the 2.36648. Okay, so wrapping up the video with gold and silver. What to do with gold? You know, you can't really buy it, you can't really sell it. I mean, you can still buy it, but, you know, mainly on pullbacks. But it does look like we are, you know, at a top in gold. Now, this is not that surprising. Quantitatively, we got the data to say, you know, this is kind of the month where we probably should expect it. Then we had, you know, now we've got a week where we're basically quantitatively extremely overbought during the week. And then we have this run of days where we turn extremely overbought on the day. So what you're essentially looking at here is a market which gets extremely overbought. It then gets extremely overbought kind of one time frame down, and then you essentially have a blow off top in the daily time horizon. So that's kind of where we're at in gold. You know, I've been saying two things about gold. One, we're coming close to a top. Two, don't short it, right? Because this is the problem. You know, you get involved with a short somewhere over here because you're looking for the top, and you get a blow off top. I mean, this thing goes from $4,200 to $4,800, $600, you know, in a couple of days. You don't want to be on the short side of that. So we are now in that area where I would say, you know, even if we were to retest the high, you know, we're pretty much, we're at a top in gold. So it's either really a profit taking opportunity, if you're already involved, or, waiting for a deeper pullback to materialize to get involved. So I wouldn't get involved with gold. I wouldn't short it. I wouldn't, what's the point in shorting it? I mean, if you think gold is going to come down 20%, for a start, it would probably only come down something like 20%, right? Gold is not going to go to zero. Gold is not going to, even half in value, most likely. So if you think, you're going to get a sell-off in gold, why try and attempt, to catch a 20% correction in gold when you could actually go out and, in other markets, you could reflect that same opportunity and, potentially get a better return and not have the risk, of gold going to the upside. So I'm not a huge fan of shorting gold anyway. I might do it for a couple of days, but not yet. This is not the time to be, in my opinion, shorting gold. I think there are better opportunities. So what I'd like to see in gold is I would not get involved here, because any kind of breakout could very easily be a false breakout. And as you can see at these levels, the liquidations, yes, the up moves are strong, but the liquidations can be very strong as well. So the risk of a false breakout intra-week is high because we're still extremely overbought on a rolling daily basis. So what that tells me is gold's probably going to pull back now, and it's going to likely turn oversold during the week at the 4083.84. If it does that, and again, it might not, maybe we get another attempt, but it's just a little bit too risky, in my opinion, to start buying at these levels. Gold, the move in gold has happened. This is kind of blow off top territory. So we run the risk of catching that kind of sharp sell-off if we try and get involved, somewhere near the highs. So I'd like to really see this pull back first. And this kind of stair step to the prior high here, this is where I would consider, for a 1 or 2 day bounce to the upside in gold at the 4033 and below the 4083.84, which is the buy zone, or the start of the buy zone next week. So specifically, this is what I'm going to be looking for next week in gold. I'd be very careful. We are in blow off top territory quantitatively. That's what the data says. If you want to argue with that and, try and buy it up here for new highs, the risk is of catching that sharp sell-off down. So that's what I see in gold. I am still a buyer, on balance, but I'd really like to see it pull back first. I wouldn't get involved intra-week. And last but not least, we have silver. Again, not quite, into blow-off top territory like gold. This is just kind of extended on the weekly, so it needs to pause and correct on a weekly basis, needs to pause and correct on a monthly basis, and now it needs to pause and correct on a rolling daily basis. So you add all this together, again, we're probably looking at a top in silver. We could retest the highs up here. But just like in gold, I think this opportunity is a little bit too risky, in the sense that, no opportunity should be significantly risky, because you can adjust your risk on any type of position. But the risk of being wrong and the risk of being wrong, on a bigger sell-off is increased. So that's what I mean by risky. But if we start to sell off, if we come down, and we actually get into a buy the dip opportunity and we start to trade below these lows, this is where I would consider stepping in for a bounce, because there's a very good chance, especially after such a strong trend, lots of people will be interested in buying that first dip, and we turn oversold below the 4944. So I do think, even if this is the absolute high, which it might not be, but if it's not, it's, in my opinion, close to it, unless we get a blow off top in silver as well, like we did in gold. But I do think, that first bounce, that first attempt is quite a high probability opportunity. And so if we get that, that is what I'm going to be looking at. And I would pinpoint the 4872, which is the first key area of support in the buy zone, for where I'd be looking for sellers to get trapped and for new buyers to step in. Now, the problem or the reversal will come in silver if we get this bounce, because you get a strong up move, you get the bounce. And then what happens is if that bounce fails to make a new high, that's where you end up with a third wave kind of to the downside in the liquidation. So between now and then, we still most likely have a significant bounce in silver as well. So I am prepared to be a buyer in silver, but I really want to see it turn oversold, and I really want to be, buying the dip as opposed to trying to buy anything intra-week or near the highs in silver. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets, as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.